Happy St. Patrick's Day, everybody. Welcome to the Wheat and Was team meeting for March 17th, 2021. Today, we'd like to welcome the team, Kristen, Francis, Cassidy, Jean, and then our guests today, which are Shelly and Liz. So welcome to the team meeting today.
Hello, everybody. Happy St. Patrick's Day.
Kristen, you want to go ahead and do our market update?
Yeah, let's talk about what's happening out there. We are in the height of snow season up here in Monument, Colorado. And also, I am happy to report that when I get on the MLS on Thursdays and Fridays, there's a good amount of new inventory that pops up. You know, this time of year, it's not uncommon to see on a Thursday 100 new listings, which is great news for those of us who are out there trying to buy houses. However, once the weekend is over and the dust settles after all the contracts fly, just to give you an idea where we are today, there are 341 homes total. That's everything: townhomes, condos, patio homes in El Paso County. 341 total.
That includes new builds?
That includes new builds. If we take the new builds out, there are, and we take out, you know, just look at single family homes, there are 270 existing. And if we take the $1 million properties out and we just look at what's available under 500,000, there's 79 existing homes.
Ouch.
But good news, we are in what is kind of the height of our season. We're approaching spring break. As soon as, you know, we get rid of how many 2 feet of snow that we had the other day, you will start to see more people itching to get out there. So yay, it's spring in Colorado.
That's crazy. I'd love to hear Shelly and Liz's from Bay Equity, their kind of opinion on the market also. So I'd like to introduce them real quick and just, I've been using Shelly and Liz for over 4 years. Our team has kind of all used them as well, but they work with Bay Equity Home Loans. They are awesome, my go-to gals. And just I always know that my clients are well taken care of with them. And so we wanted to bring them on today and just kind of answer some questions about, from a loan officer's point of view, what things are looking like. So yeah, Shelly and Liz, what's your forecast for the market, interest rates, kind of what are things looking like on your end?
Sure. Well, interest rates are going to still stay low in 2021. They're going to go up a bit, but we're still going to see historic lows. We've already seen an increase in rates in the last couple of weeks, but we are expecting to see just them remaining good throughout the year. I would say demand is on the rise, as we all know. Last year, I believe they kind of thought we'd have a market crash with people not being able to pay mortgage payments, but that actually didn't happen. It went the opposite direction. So rates will still stay low, and I think the market will still be good. There'll be more homes. The refinances are still great. Still a good opportunity to take advantage of the low rates. So.
I've seen a lot of hiring signs. I see a lot as you're driving around town. There's a lot of people hiring right now. That's good news.
Good news.
What is the VA rate right now and the VA limit?
The VA loan limit for the max loan amount is $548,250 in El Paso County. If you, though, don't have any other VA loans out there, you can go up to 1.5 million without putting a down payment down, as long as you qualify, of course. But if you do have another loan out there with a VA, you will need to make sure we stay in that $548,250. Yeah.
And what about FHA? What's the FHA limit in El Paso County?
Is $393,300 for the loan amount. You can actually purchase up to $407,564 with just the minimum 3.5% down. So that's gone up a bit. I think I've heard, you guys would know more than me, but that over the county, I believe the average purchase price is like $450 in El Paso County right now. Do you guys,
Yep.
you guys see that?
Yep.
So, but now still 407 as a purchase price, so 3.5% down. That has gone up. So hopefully that will help some of our first-time home buyers.
Mm-hmm. if I could ask a question real quick, because this is where we get a little bit of, because we're so close to Denver and we have so many buyers, qualifying for FHA up there coming down here. Counties are different, right? Explain how what the difference is county to county crossing lines.
Correct. Well, VA will be the same in Colorado, but for FHA, it does go to different counties as far as, and different types of properties. So the Denver counties have a higher loan limit to purchase on FHA. And then, if you're buying a 1 to 4 unit property, if you're in the 4 unit property, you'll have a higher purchase price as well. I'd have to look and double check the county loan limits for those counties to give you accurate numbers on that. But yeah, you can get substantially higher of an FHA loan once you cross over into the next county up.
Liz and Shelley, what changes in regulations are you seeing in 2021?
We saw the agencies come out last year. They started tightening up the regulations just because of the unknown, because of what was happening in the early spring. We saw the loan limits increase, which was a great change. It was a positive change for us here in El Paso County. We saw a lot of changes with self-employment documentation. So any of our clients that are self-employed, and that's whether or not they're an LLC, a partnership, sole proprietor, or an S Corp, there's a lot more scrutiny, and our underwriters and all underwriters, all lenders are requiring more up-to-date information. So we're actually looking at P&Ls a lot closer than we have in the past. And we are looking for dips in income. Sometimes we can definitely explain the dips in income. There's a seasonality to a lot of self-employment, and our underwriters are very well acquainted with that. So we can still make that work. Recently, was it yesterday or day before, Fannie Mae or FHFA came out with changes in regards to second homes and investment properties. And the charges for those that would be included in the interest rates are going up. There's a lot of speculation. We think that it's because right now there are a lot of purchases going on for investment properties and second homes, but then there are federal regulations in regards to rent moratoriums, and that is affecting landlords. So the agencies are starting to look at those holdings a lot closer to make sure that those loans are performing. So you'll see interest rates increasing on second homes and investment properties over the next couple of months. And then also you can see a positive change too, because when the market does not react the way that it's expected to, sometimes you'll see a positive change in rates.
What are you seeing now with appraisal values and with, some of these crazy appraisal gaps and stuff that we have to write into contracts? Or, what are you seeing in terms of how many appraisals are coming in low or at value, or are they looking at all the other, multitude of offers, and, how is that affecting the appraisals?
We've been pleasantly surprised recently in regards to the appraisals that we see coming back. We always look at the purchase contract very, very closely to make sure that we're interpreting and understanding the appraisal gaps and the appraisal provisions. And then we go over them with the clients and the realtors to make sure that everything is input correctly and sent over to the appraisers correctly up front. And we have seen if there are comparables to justify the appraisal gaps and appraisal provisions, we have seen the appraisals coming back high. We have seen some houses as the highest comparable on the appraisal, which is a little unusual for us. We've seen that across FHA, conventional, and VA. As long as the appraisal can be justified, the dollar amount, we have seen a lot of extra information from appraisers that we haven't seen so much in the past, where they are taking the extra step to document the appraised value, whether it's high or low. They want to let us know that they've done their due diligence to make sure that the appraised value is the best of their ability. An appraisal is always an opinion, so we do try to go over those as well once we get them back to make sure that they're going to pass through underwriting. But we've been pleasantly surprised.
Are you seeing a lot of time adjustments on the appraisals, or are they just not going back as far for their comps?
We were just speaking about that before this call. And we don't really know what to call it because it's something new in our world. But if a comparable sold maybe in November or December, the appraisers are actually putting on an adjustment for the comparables to allow for the appreciation that's happened over the past couple of months. And we've never seen that before.
Yeah.
So the appraisers are trying to justify the value while also returning a good value for that, for the house or for the subject property.
Yeah, I've seen even a page or two in the appraisal reports that I've never seen before, with a graph and updates in that manner with just increasing value and trends that we have never seen in other reports. So it's new and exciting, that's for sure.
Good. I have my fingers and toes crossed for Lucky Irish to come through today, because I have one appraisal went out this morning, and we got what 70,000-80,000 over ask. So praying that comes in good.
We've been pretty lucky lately, so I'm happy to hear that other people are in the same situation that you've experienced, Shelley and Liz. So I wanted to ask, what sets you, I know personally, but I want to hear it from you, what sets Bay Equity apart from other lenders? Yeah.
Well, Bay Equity as a whole is just an amazing company to work for. Here locally too, in our county, we have just some amazing loan officers that work on our team and with us. Shelley and I have worked together for almost 11 years. We've been a team for 11 years in doing purchase and refinance mortgages only. There's always one of us available. We never, we're always here. We're just a good fit as far as that goes. Our clients know they can get a hold of us. Our realtor partners know they can get a hold of us, and our experience too. Want to add?
We work with a lot of clients through all different socioeconomic spectrums. So we've seen a lot. We're willing to dig in. We have an amazing support group, both with the scenarios desk and our underwriters. We can speak to our underwriters. We can talk to them. We can run scenarios by them. What if this happens? What if that happens? We've seen a lot over the past 11 years. So if we can get a client approved, we'll do so. And we like to do our approval up front so that
Yes.
once we go under contract or once
important.
y'all go under contract, it's just a matter of getting to the closing table. So then it's just checks and balances, because we do a tri-merge credit report. We pull DU, we pull LP, we've already got their income documents, their asset statements. So it's just a matter now of going through the process once we get the purchase contract. We don't want to start fresh once we get a brand new purchase.
I know that if you tell me someone's going to close, that they do. So that's what I personally like. So I'd rather get that figured out at the beginning and not, once we're under contract and someone's fallen in love with the house and we've got a seller to take their house off the market. So I appreciate that.
We have to
It's
sleep at
emotional.
night too. So
Yeah.
we have to make sure that when we're standing by what we're sending out, we take that serious.
Well, and in this incredibly competitive market for buyers, it's so important that the lender is our partner too, and we'll call the listing agent and, let them know that we have pulled the credit. We have done all the documentation up front. This is a very good, strong buyer, because that speaks volumes.
Well, thank you so much, ladies, for being on. I want to wish everybody a happy St. Patrick's Day, and thanks so much for joining us.
Thank you.
Bye, guys.
Thanks.
Bye.
Thank you.